So guys, I'm going to be taking trades on gold, because if price comes above that zone, we are going to start taking momentum trades, because price would have given us the indication that it wants to go above the zone. We see the first time that price came above this area, it made another strong push to the upside. Okay, so this was the first indication that we had. That means anything above that zone, anything above 495 is I mean for 200 is gonna be good for buys. Okay, so I'll take in my buys after price comes above that level. I'll take in my buys. I'll hold price until we reach around. You see, when you're trading ICC, you have to first of all look for the first indication where price faced resistance. So price pushed up until up to that level where I faced resistance, and then afterwards we had a continuation to the upside. So I'll be holding price. So if price comes above here, let me just show you. Okay, this area here, if price comes above here, I'll be buying, and then the TP, this is a buy limit, so the TP will be around here. Okay, it will be $52. Stop loss is gonna be just around $50, because if price goes underneath, there is no reason for me to continue holding. But I know that if price comes above, then I can start holding my trades, because I know that price is likely now to start pushing higher towards the same zone that it pushed towards to in the first area. And also we know that for gold, price has already shown us an indication in the H1. If you observe from your high time frame, price gave you an indication that it wants to buy by going above that level. Okay, so that will be the next level of resistance. The first level will be broken, and then afterwards we shall take our entries. So let's wait a bit. But I don't see much on gold right now, because it's kind of slow. We in London going to the New York session, and it's pretty slow. So I wouldn't take entries right away, because I know that price is likely to first of all start stalling before you can have any key movements in the market. But as I've told you, if you observe to your left, let me first remove all these drawings because they are confusing me. Okay, just ignore them for once. If you observe to the left here, okay, whenever price went above this level over here, we had a massive push towards this area over here. Okay, that means if price comes above that area the second time, we may have the same thing happening. So it's just the probability that the same thing that happened to on the left could happen on the right, because if you observe also to the left there, we had another push to the upside. Above this level again, we had another push to the upside. So above this level again, we had another push to the upside. Above this level again, we may have another push to the upside. As simple as that. You're not trying to predict the market, you're just trading with probabilities that above this level there are buyers in the market and they're willing to push price higher. Simple as that. There is no indicator, there is nothing just that can help us out. We're just trading pure price action. So for gold, that's what I'm looking for right now, although my buyers can shift any moment from now, because gold has been showing me signs that it wants to buy. So if you want a safer entry, you can wait until price comes above this zone over here. If you observe, once price had made the first level that we broke after price made bullish momentum was around here. Okay, so once price came above this level of resistance, anything above this level of resistance is good for buys, and price has the potential to reach over that area there. That means if price comes back again above this level, so let's say we saw that, let me show you what market even did for you. We had an indication. This was the first indication that price is going to push higher, okay, by breaking the nearest level of resistance. Don't mind what's going on the left, mind what's in the now. Okay, so price gave you the indication that it wants to go higher. What did it do next? It made a strong liquidity grab. Okay, then here most people would panic. They will say, oh, price is now starting to sell, let's start stacking in our sell positions. So they would stack in their sell positions here because they want price to push all the way down. That's not how trading works. If you want to stack in your selling positions, you would have had to wait until price came above underneath this zone. Why underneath this zone? Because we have seen that price before it had an indication that it wanted to sell. This was the first indication. So if price came back after the pullback, we would have had another indication to sell. Okay, but what happened next? Price broke through the previous level of resistance, came back for a pullback in form of a corrective move, and then what happened next? Price pushed higher. Okay, So that means that anything above this level of resistance is good for buys. So anything above this level is good for buys. Simple as that. No complicated diagrams, no no pure no nonsense. Okay, we're just dealing with pure price action. So basically that's it for now. I think that's the source that I had for you guys. As I've been telling you, we have to wait for price to break above this area over here. This is a level of resistance, so once price breaks above it, we are good for buys. Also, if you can hold this trade, we can hold it until price reaches the next level of resistance, which is above there. So let's wait and see.